Here's how I earned around 4,000 USD in 3 weeks by using Olympus Dow and Time Wonderland. Welcome to Crypto Society. My name is Sean. Before we begin, I want to say that this is a high-risk, high-reward way to make money. So definitely don't invest your entire paycheck or take out a loan or invest any money that you would regret losing in the short term. Please do your research and be careful. I'm not a financial advisor. So what is DeFi 2.0 and how could I make thousands of dollars a month by using Olympus Dow and Time Wonderland? I'm going to assume that you know very little about cryptocurrency and DeFi, and I'm going to try to build your understanding one step at a time. Currently, there are several cryptocurrencies that follow the US dollar price 1-to-1. They're pegged to the US dollar. These cryptocurrencies are called stablecoins. Some examples of stablecoins are USDT, USDC, DAI, and MIM. There are many use cases for stablecoins, but just to give you one, let's say you're holding Bitcoin and the price of Bitcoin goes way up. Since Bitcoin is a bit volatile, in order to capitalize on these gains, it's good to exchange some of your Bitcoin into USD stablecoins in order to actualize that profit. Then, maybe when Bitcoin drops again in price, you can use some of these stablecoins to buy Bitcoin again at a lower price. Or you could use it to buy other cryptocurrencies, or you could cash it out on an exchange into fiat currency. Get some cash and buy yourself a nice steak. Good. So now that we have this understanding, I'm going to explain Olympus Dow and Time Wonderland. I will begin with Olympus Dow, since it's the original DeFi 2.0 protocol. Olympus Dow exists on the Ethereum network and uses the OHM token. The idea with Olympus Dow is that every single OHM token is backed by one stable coin. So how is that different from stable coins? Why would I need an OHM token if I could just buy USDT or USDC? Well, stable coins are pegged to the US dollar. Their price mirrors exactly the US dollar, whereas OHM is backed by the US dollar, which means that the price of one OHM can never go below $1 or one stablecoin, but it can go above it. It's really confusing. What does that mean? Don't worry, I have the perfect example to help you understand. Think of sneaker collectors. Many people trade rare and limited edition sneakers for thousands of dollars. The price of these sneakers, the longer you hold them, can go up and up as supply is short and demand for them increases. From what I've heard, several Jordan sneakers sell for thousands and thousands of dollars. But what if all the hype and popularity for limited edition sneakers just died? All of a sudden, well, you'd still have a pair of sneakers you could wear to the gym, you could wear them when you're walking in the park, you could wear them in many situations. They would still have that base value, right? This concept is exactly the same with Olympus Dow and the OHM token. As demand for the token increases, the price keeps going up and up, but it can never go below $1 per one OHM token. So how does OHM make you money? This is the beauty of this protocol. When you stake your OHM token, you get an insane amount of APY. When I first saw this, I thought this is definitely a scam. I've seen a lot of stuff like this promising thousands of % of interest for staking. This must also be a scam. But this is actually a legit project. So let's look into how this works exactly. There are two actions you can take to acquire OHM tokens. One, you can buy the token off of an exchange. I used SushiSwap. This makes the price of the OHM token go up because you're taking tokens off of the market. This, of course, is really good for the project as a whole. After that, you should stake your OHM in order to earn really insane interest. The action of staking also keeps this OHM off the market and maintains the high price. The second way to acquire OHM is by minting. By minting, you're paying Olympus Dow to create new OHM for you at a slightly discounted price. In order to mint, you have to pay Olympus Dow stablecoins. You can also pay in LP tokens, but I'm going to keep this simple for now. So after you pay to mint some OHM, you receive your OHM over a 5-day period. You get 20% of that OHM you paid for over 5 days. So for example, if the market price of ohm is around $1,000, maybe you'll be able to mint it for around $950. You're saving $50, and since one ohm has to be backed by one stablecoin, the protocol makes $949. So with some of that profit, they use it to make more ohm, to which they use to pay people who are staking their ohm. This is how they're able to offer such insane interests. So after you receive all of your ohm from minting, you will most likely stake it again, which keeps the price off the exchanges and at a good level. All of these actions lead to a fairly stable and ever-increasing price as the protocol grows in size and users. This actually plays on game theory. The classic example to explain DeFi 2.0 protocols such as Olympus Dow is the prisoner's dilemma. Okay, so say you and your friend commit a crime, but you get caught by the police. When talking to the police, you and your friend are separated, and you have two options. The first option is to stay silent and say nothing to the police. The second option is to tell the police everything your friend did and claim that you're innocent. Your friend also has these exact two options. So there will be three possible outcomes for you. If you and your friend both tell on each other, you will both get 10 years in prison. If you tell on your friend, but your friend stays silent, you will get to walk away free, but your friend gets life in prison. However, if you stay silent and your friend stays silent, you both only get 1 year in prison. So staying silent would be the obvious choice, right? So this is the exact same theory that governs Olympus Dow. Buying or minting and then staking ohm is good for me, and it's good for everyone else in the protocol. Selling my ohm token on an exchange for profit makes the price go down and means that I don't get any more interest on my ohm. So similar to the prisoner's dilemma, it's in everyone's interest to buy or mint ohm and stake it, keeping it off the exchanges and keeping the price at a stable level. So what are the risks and how can you lose money? Well, of course, black swan events happen all the time. A new COVID variant, a scandal, a rug pull from a similar project. All these things can scare people and trigger them to sell their ohm tokens. So if something happens that causes the ohm price to plummet, a few things will happen. First off, the price will never drop below $1 because there's always one stable coin backing every single ohm token. But remember our minting example from earlier where we minted one ohm for $950? Well, since the protocol kept a lot of that profit, it can use that profit to raise the base value of one ohm token. And the risk-free value for one ohm token raises much higher. Currently, the protocol has $152 for every one ohm token that it will use to buy back in the event that the price of ohm plummets for some reason. What does this mean? That means people who got into the protocol really early and invested maybe $150 per ohm token are now completely safe from any loss and actually end up with a net positive if ohm crashes. That's pretty amazing, right? But it's much riskier for people just getting into the project now. It might also be quite risky for someone who only wants to invest in the ohm token for a short period of time. Just due to volatility, you never know what's going to happen in any given day. In my case, I invested around $5,000 in ohm, and in around 3 weeks, the value of my staked ohm increased to $6,500. Not bad, right? So I love ohm and Olympus Dow, but I do not love the transaction fees on Ethereum. It cost me about $500 to swap my tokens to ohm, to connect my wallet to Olympus Dow, and then to stake my tokens on Olympus Dow. These type of transactions on Ethereum really prevent people from experimenting by investing only a little bit at first. That's why if you're interested in DeFi 2.0, I highly recommend Time Wonderland. Time Wonderland follows the same exact structure as Olympus Dow. The buying, the minting, the staking, the interest, but Time Wonderland is on Avalanche, which has very small transaction fees. Also, since Time Wonderland is much newer than Olympus Dow, the interest that it's offering is way higher. Time Wonderland only came out in September, but due to the low transaction fees of Avalanche, Time Wonderland has really taken off and has actually surpassed Olympus Dow in market cap. So Time Wonderland was actually created by some of the same people who designed and worked on Olympus Dow. These people broke off from Olympus Dow and decided to create their own version, calling it Time Wonderland. Personally, I've made around $2,500 staking with Time in about 2 weeks. If you're just getting into DeFi, I highly recommend that you experiment investing with a smaller amount of money. And because of that, I recommend using Time, just because you'll save so much on transaction fees. Now I'll walk you through on how to set up Time Wonderland and Olympus Dow if you're curious about that too.
So if you need to bridge Ethereum to Avalanche, I recommend using this website, bridge.avax.network. And you could choose something like USDC, let's just say. Hit that. And on your Ethereum network, you can, let's say bridge over $2,000. I don't have that currently on Ethereum because I don't really use Ethereum that much. But yeah, you could bridge that over to Avalanche so that you could start trading on the Avalanche network with Trader Joe. So now we want to go to Trader Joe, which is a popular exchange on the Avalanche network. Go here and then click Trade. Also, I'm pretty sure that if you haven't already added the Avalanche network to your MetaMask, you can add it very easily once you enter Trader Joe. It'll do it almost automatically for you. Once we're in trade, we're going to trade some of our Avalanche or AVAX token for Time. So just type in Time. Once you get that, enter the amount that you want to change. I'm going to do just a little bit here just to show you what that looks like. That'll come up and just confirm the swap. Then you can confirm it in your MetaMask wallet just like this, and then you're good. It'll take a few seconds to just confirm and process. Now we're going to go to the Time Wonderland website. Make sure you're on the Avalanche network still, and then hit Connect Wallet. Once you connect it, you can just click the Max button to stake all of your Time in your wallet, and then you just confirm that transaction in your MetaMask. And after a few seconds, that's going to confirm as well. It's really that easy. All right, we're done. If I want to unstake, I would just hit the unstake button and hit max, or the amount that I want to unstake if I want to cash that back out on Trader Joe's. Here's the current price of the Time token. I think the current crypto market at the time of making this video took a pretty big haircut due to the new COVID news. So that's a little down right now, but I'm pretty confident that it'll go back up. The cool thing though is that even if it takes a little while to go back to 8,500, which is what it was last week, I'm still earning money because the interest, the APY I'm getting on Time is so high. You can see here, 82,000 APY, which is just insane. So similar to Trader Joe's with Time Wonderland, in order to get the OHM token, we would go here to Sushi Swap, and we would just trade our Ethereum for OHM. You can see I already have OHM selected, but you can find it in this list. Just type OHM. And you can do like 1 Ethereum for however much OHM that is. I currently don't have enough Ethereum in my wallet to show you, but you guys get the point, I think. Now let's take a look at Olympus Dow and see how we can stake some OHM. So we're going to make sure that we're on the Ethereum network. We were just on Avalanche, switch to Ethereum. And we're going to hit stake right here. And it's literally the same exact thing as Time Wonderland. You can easily stake all of your OHM tokens that you just got off of Sushi Swap. And you can unstake them whenever you'd like. Like I said before though, the Ethereum gas fees, the transaction fees are insane right now. So I would highly recommend starting off with Time. And we can see the price for OHM is currently $725 per 1 OHM token. But of course, if you have your OHM staked in the protocol, you're going to be earning a lot of APY. So even if it temporarily goes down, you're still getting a lot of API. And then once it comes back up, that's where you make your big profit. Anyway, yeah, so that's it.
Thank you so much for watching, everyone. I hope this was helpful to you guys. What other kinds of videos do you want to see in the future? Let me know in the comments down below. My name is Sean, this was Crypto Society, and I'll see you in the next video. Bye.